The S&P 500 and the Dow Jones have done it again, climbing to brand new record all-time highs. Gold too has punched to a brand new record all-time high, hitting $4,600 US, while copper is chasing towards its new record, and JP Morgan no longer sees the US central bank cutting interest rates this year, but that's not what the futures are saying. And this is all following a stronger than expected December jobs report. My name is Jessica Amir, a market strategist here with Moomoo on the 13th day of January. But first, let's cover some news that you need to know. As for news from the White House, Trump is at it again. He's vowing a 25% tariff on goods coming from Iran, and he's pushing for US oil companies to invest at least 100 billion US in Venezuela. Trump then threatened to sideline Exxon after Exxon said the nation is not investable. So keep your eyes on some oil producers that are making waves. Meanwhile, we've seen the US and Taiwan near a trade deal. This is really good news. It could take tariffs on the nation to 15%. And there's also expected to be some form of commitment for the company TSMC to perhaps build 5 more manufacturing plants in the US. This is another reason to watch TSMC, of course, the world's largest foundry company and chip designer. Most of the world's chip makers use TSMC. In company news that you need to know, we also saw lots of pledges overnight from big heavyweights. NVIDIA is going to invest $1 billion in an AI drug lab with Eli Lilly. Meanwhile, Google parent Alphabet has entered a multi-year deal with Apple to power their AI, including Siri, for their new chips. And again, this is another wake-up call to sit up and watch Alphabet. It could be one of the biggest winners of the AI boom. But today's focus is a big wake-up call, and it's for you to consider copper. It's in a perfect storm, bound for higher levels in 2026. Here's what you need to know. So copper rose towards its record all-time high, and that's because the metal is expected to be a key physical asset winner from the US monetary policy easing, while we're expecting further depreciation in the US dollar. This is all while copper demand is on the rise. And this is why we are expecting this perfect storm to brew copper prices to the upside. So something that I'm watching, you might like to know this. So the 3-month futures, they're actually up 1.5% overnight. They rose to $13,195 a tonne in London, with other metals following, like aluminium and tin, trading at their highest levels since 2022. But let's just go back to copper. The fact that the futures price is higher suggests that traders believe that prices will continue to rise because we do have the futures price higher than the current physical spot price of copper. The current price of copper is at $13,117 a tonne in London, and that was after it jumped 1% yesterday. But copper, I've spoken about this a lot before. It's seen as the king of the green EV revolution. Why? Well, it's used in everything that you can imagine, pretty much, from wires and cables, plumbing, manufacturing, and of course, it's the key in renewable energy. It goes into solar systems, wind systems, and we need a lot more of copper for the new EVs on the road as opposed to the old fuel combustion engines. In fact, to put it into context, we need 3 to 4 times more copper than a normal car for an EV. And plus, you've got to consider that we have been speaking about this AI revolution. So we're seeing unprecedented demand and forward demand for copper with the rise of AI chip demand and data center demand as well. So this is why the copper prices continue to march on higher. It's up 20% since mid-November. And this is, again, going back into that notion that the world is going to be short of supply. And this is why you could be expecting higher copper prices in 2026. Another thing to consider, just to really layer out this argument, is the thinking is that there is going to be a copper deficit. To put that into context, the deficit or the shortfall is actually expected to be 150,000 to 590,000 tonnes of copper. So this is because there's been depleted inventories in the US and there's been several producers that have not been able to meet their quotas because they've experienced flooding or issues at their mines. And this is all while we are continuing to see a freight train of demand for this critical king of the EV metals. So the question for you, ladies and gentlemen, is will you be investing in copper, given copper is expected to deliver some strong surprises and earnings upgrades this year? And as I always say, earnings upgrades drive share price growth. So the other question is, how could you invest in copper? Well, there's many ways to skin a cat. The world's biggest copper producers, just as a reminder, we've got BHP that's listed here on the ASX, and there's a secondary listing in New York. But you've also got another big producer, Freeport McMoran. Or you could look at smaller companies. On the ASX, we've got one of the largest pure copper play companies in the world, that's Sandfire SFR. Or you could look at ETFs. There's many copper ETFs. One of those is the Global X Copper Miners ETF or the Global X Green Metals ETF. These look at baskets of copper mining companies, so they could be some considerations for you. But now let's move into the investments to watch today. Let's kick off with Freeport McMoran. That's, of course, got exposure to copper. And I guess this supports the fact that Freeport McMoran was the sixth best performer in the S&P 500 overnight, doing really well, rising almost 4%. It's continuing a pretty strong run that we saw last year, in fact, where its share price jumped 52%. Yes, it is the largest US copper focused company, and it's got a huge market capitalization, putting its size at 84 billion US dollars. Where are its mining operations? Well, they're across America and Asia, and you should be keeping your eye on their shares for a couple reasons. One of those is they're chasing towards a brand new record all-time high that they last hit back in the GFC. That was 2008. So their shares are currently at $59. But consider this, 10 years ago, their shares were at $3.52. Just outstanding. And you could argue that the stock is just starting to enter an earnings upgrade cycle. And this means that we could start to see more upgrades for this mining company based on the catalysts that we spoke about earlier. But we saw one investment bank recently upgrade Freeport. That was JP Morgan. JP Morgan lifted their price target for Freeport to $68 last week. But all in all, we do have a strong buy consensus rating on the Moomoo platform, which is a pretty positive sign of sentiment for Freeport McMoran. Another stock to add to your watch list today is NexGen Energy. It's trading at record all-time high territory after it put on a gain of 1.1% yesterday on the ASX, and it's already up 15% this year. It's one of the best performers on the ASX. But of course, it's not just listed on the ASX, it's listed in Canada as well. But what you need to know is this is basically a reminder that the market is telling us to really strongly consider uranium producers this year. The market is suggesting that uranium producers will probably have a pretty good year ahead. And there's all good reason for this. The spot weekly uranium price is back on the rise, and that's because we're seeing increasing demand for nuclear energy, while we do have supply constraints. Also consider the weekly uranium price is up 14% so far this year. That's a pretty strong signal that uranium companies are going to see a vast improvement in their earnings this quarter and perhaps the year ahead, because we did see the uranium price pull back from its highs last year. Also, consider that this company that we do have on the screen is the fifth biggest holding in the world's biggest uranium ETF, URA. Last but definitely not least, here's a stock to add to your watch list, and that's Delta. It should be on your radar for a couple reasons. One of those is they are expected to deliver their full year earnings results tonight in the US before the US stock market opens. The second reason that you should be watching Delta is because it's trading at record all-time highs. Now, if they report strong results tonight, it could set a really positive tone for the entire US airline sector. And the other reason that I think you should be watching airlines is because, remember, we spoke about this last year. The oil price and airlines tend to have an inverse relationship. And we do have a really strong favorable setup for airlines this year. The last time I actually highlighted this was that you should consider investing in airlines was back on November 24. And since then, we've seen the three biggest US airlines break out, and Delta has risen 28% since that call. United Airlines has risen 24%, and American Airlines has risen 30%. But the catalysts remain the same. You could be expecting higher levels for American Airlines. Why is that? Because Americans are expected to spend a record amount on holiday travel this year. But I am suggesting that you should keep airlines on your radar, such as Delta, and maybe trade them as well. The other reason that I'm saying to consider airlines such as Delta is because there is greater expectation that Trump could put downward pressure on interest rates this year in the US, which could stoke unexpected rise in travel demand. Also, keep your eye on the JETS ETF. That's an easy way to gain broad airline exposure. Plenty to watch and consider. Thanks for your company.